How do you start a bank? Don't you need lots of money, to be able to lend it to people?
It helps to have experience working in lending to start with. Our chairman, who's a good friend of mine, I've known him for over 15 years. He's the one that made that call to me a few years back. He actually purchased a bank with two partners. It was a very small community bank, about an hour southwest of Atlanta in LaGrange, Georgia. He purchased them about 3.5 years ago, actually. And the bank was not doing very well. It was kind of barely keeping its head above water. But his thesis was it's difficult to be a non-depository institution and be a specialist in this because you have to rely upon, like you said, excess capital, large warehouse lines of credit to fund the loans. You have to then sell things into the secondary market. There's challenges related to that, as opposed to being a depository institution like a bank or a credit union, where that is traditional banking. You take the deposits, you lend them out in the form of loans, and you get repaid. And if the depositor wants their money back, you're able to give the money back. That was sort of the business model that we had, which is we want to continue doing the best at what we do, which is government guaranteed lending for small businesses all across America. But we wanted to use the bank as a funding conduit. So it's a relatively small bank, even to this day. But if you looked at our balance sheet, the only the main core assets on our balance sheet are the portions of non-government guaranteed loans, because we sell off the government guaranteed portion in the secondary market and we recycle the funds. And so it makes us extremely efficient. It makes us very profitable. Our net interest margin, which is a key metric that banks look at, is very high, one of the highest in the country. But to your point, you have a vision, you execute on the vision. Looking at a bank in a little bit different model than probably what most bankers look at. Most bankers are not as excited about doing government guaranteed lending. Most bankers want to be all things to all people. We don't. We want to be highly focused, highly specialized, and it's a different mindset, I suppose, than most of our colleagues in the industry.
So a government-backed loan, then are you borrowing the money from the government effectively?
No. So what happens is we actually are able to offer better terms to our borrowers. So we offer longer repayment terms. We offer less down payment, usually half, maybe a third of what they would get from an ordinary conventional bank. We don't typically have restrictive loan covenants involved. Interest rates are still competitive. We're able to finance different uses of proceeds that are very challenging for a traditional bank. And in return for that, the lender as well as the borrower pay a government guaranteed fee, and the government actually guarantees a portion of the loan. Usually it's about 75% in the SBA 7A, which is what we're specialists at. And then if we do a USDA B&I loan, it's typically 80%. So it basically addresses an area of the marketplace that traditional banks don't want to go. Traditional banks don't want to be lending in rural America for the most part, which is what the USDA program is built for. A lot of times traditional banks don't want to finance startups. They don't particularly care for franchises. They don't want to do business acquisitions. All these are types of financings that we do with our SBA 7A product.